Welcome to HowStreet.com Radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to our summertime show, David.
It's good to be back, Jim. And it looks like the dog days of summer in terms of finances are going to be coming to a close in the next few weeks.
It seems the entire market has backed up a bit. It used to be all the action happened in May. Nowadays, the action never stops.
That's true. You never know when you're going to have an outlier coming in, but I really believe that we're seeing the calm before the volatility in regard to the resource sector markets that you and I have been following for so long.
And we always like to title our shows, and this one we both agree is Catching Falling Knives and Floating Feathers and the Difference Between the Two.
You bet. And I think the analogy is a good one for what we've experienced over the last, really 2 years in different places over the last 2 years with mining stocks in particular. You see when a stock is collapsing, I would call it a falling knife. And the recommendation there is you don't try to catch the falling knife. You wait until it hits the ground, and if it's still around, then you pick it up. And as Louis James would say, you catch a falling safe by waiting until it hits the ground, and then you go pick up the money. And a knife can be real dangerous if you're trying to catch it when it's falling. So what you try to do is try not to guess where the falling knife is going to end up and wait for things to change, for the market sentiment and the action to change. And I think what we've seen now, we've seen most of the falling knives, unless some company is just going to go to zero here with new information. And now we're seeing a drifting down of prices. They're going lower, but I would call them floating feathers. And so the price just goes down, down, down. Most days, maybe out of 8 days, it goes down 6 days with just a little tiny correction. And then there's another variety, which is very fascinating. I'm following one particular company, which I hold, and without naming it, but it's a company in Mexico, a silver producer that has 4 or 5 mines going, and it went down to around $9 about a month ago, and then it went up fairly rapidly to about 14, a very nice retracement of the bear market low, and now it's around 11.50. But I've noticed it's kind of been drifting, whereas that first move, say from a 14 or 15 down to 9, was fairly precipitous, and it looked like it was going to keep on going forever. And then when it turned pretty sharply, it rose fairly robustly to 14, and now it's drifting little by little, and it's about 11.50. And I don't know if it'll go down to 9 again. I suspect it will not, but I think it's going to be testing that area. And so someone that wanted to add to a company that was doing that kind of behavior would look to buy at a 50% retracement or a little bit lower in several tranches if they still had faith in the company.
Are we still keeping an eye on foreign markets? I'm examining South Africa with all their labor unrest. Do you really still have to be geopolitically aware of where you're putting your money?
You have to, and you have to be aware of how geopolitics affects you in a different area of the world or your projects. For example, today Zimbabwe announced that it's going to nationalize all the mining interests in Zimbabwe, and they're going to pay some money to the banks that own some of the projects. But basically, from what I read from it, it's shutting down the industry there. And of course, Zimbabwe is a fairly robust producer, has been historically, of the PGMs. And South Africa continues its ruinous policy from the government point of view and the labor point of view of driving more and more mining concerns out of business, producing platinum and palladium, and of course about 70% of it comes from there. So I think we're going to see some real price surprises when the market finally decides enough is enough and decides to bid these metals prices back up due to these geopolitical events.
David, we'll see what we can do to shake up the dog days of summer when we return after this break.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. The events in Zimbabwe, a shocker for many, but David, you're going, Mugabe's never been the most stable guy in the world. We know the elections there aren't fair. What is this going to do to the world market with the very vital things that they produce?
It's going to tighten it up more and more, and until that situation changes there, we're going to be seeing a decrease in supply and increase in demand. And so I think we've talked about this for about a year and a half now, and interestingly enough, the platinum and palladium have held up much better than the other precious metals. And I still think they're going to be the first to move, and when they do, I think it's going to be surprising and powerful. And so people that are still doing their homework on either the ETFs out there that are gobbling up, one ETF that was formed in South Africa about 4 or 5 months ago now has taken 500,000 ounces of platinum off the market. So it's just a matter of a kind of an inflection point being reached, and you and I don't know where that is or where the price is going to be or when, but it's coming, and it's going to be pretty stunning, I think, when it finally happens.
So platinum, palladium, good things to keep an eye on?
Very definitely, and whether or not they'll have the same price appreciation on a percentage basis that gold and silver do as we move into the public mania phase of the market remains to be seen, but I do think that they're going to do very, very well on their own merits.
I know in the past some people who have the resources behind them, who own mining companies and so on, have financed minor coups and taken over a nation to make sure their products are still produced, or their mining interests or oil or whatever. Could that happen in Zimbabwe?
Well, I don't think so, because there's no entity there, a foreign entity, that would have any kind of power to do something like that. And of course, the other African nations in South Africa wouldn't tolerate it either. And yet they tolerate this individual for 30 years on their doorstep, who's taken Zimbabwe from an exporter of wheat to a country where starvation is almost the norm, and who produced the greatest inflationary currency bubble a few years ago in modern times. Pretty amazing to watch.
Is it because the mining companies have had a free ride?
Not at all. Not at all. They've increasingly put the screws to the mining companies, and the people there's such extreme poverty that people will go into little ditches that have little flecks of gold from streams, and they will pan for just a small amount of gold. And if they're too old or weak to do it, they'll hire some young person to do it, and if they can't do that, they just starve to death. It's really, really sad.
And, sitting on this side of the ocean and looking at that, you wonder how the international community can allow that to happen. Or is it a case of it's a free market?
It's, people have to take care of their own neighborhood, and no one, not even the United States, can finance the world and keep everything humming right along and make sure everybody has a meal at night. I would suggest that there's a certain responsibility to the governments of those countries, to their own people. And if they don't do it long enough, at some point the people say, we've had enough. And you look at North Korea and you wonder how long that's going to take. It's taken 3 generations. But you've also looked at Romania, and you looked at the Soviet Union and some of these other places where people have been fed up, and the regime collapsed and imploded, and they ended up with some better days ahead. So we'll just have to watch and see. And
I also have to say the U.S. cannot afford anymore to be the world police.
Definitely
simple
not.
As that.
And when these countries that we're talking about, when Zimbabwe finally makes the corner, people that have an ounce of gold there or 10 ounces of silver, it may be enough to save their lives and keep food on the table so they don't starve to death. And so that's why the metals are always the currency of last resort. They've been that way for over 5,000 years, and they're going to be that way again. And when we see inflation in the United States and Canada, and the implosion of the bond market, and when the stock market rolls over and this sort of thing, the people that have a little bit tucked away are going to have an opportunity to protect some of their wealth rather than having it washed away by the tides of government incompetence.
Thanks a lot for chatting with us, David.
It's been good talking to you, Jim.
My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HoweStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HoweStreet.com. I'm Jim Goddard.